Welcome to the deep dive. We're here to cut through the noise and get straight to the insights. Today, we're really unpacking a decision that definitely sent ripples across global financial markets, and especially into the world of crypto.
That's right.
On September 17th, 2025, the Federal Reserve made a key announcement. Now, many had sort of seen it coming, but its immediate impact on crypto wasn't quite the bang everyone predicted. For some, it felt like a classic, buy the rumor, sell the news moment.
Absolutely.
But if you look closer, there was, well, a much deeper story unfolding.
Exactly. We've toured over an in-depth analysis report, really digging into the Fed's move and its multifaceted effects. So our mission in this deep dive is pretty clear. Guide you through the crucial takeaways, connect those dots between macroeconomics and digital assets,
Right.
and hopefully give you a much clearer picture of what this actually means, for your portfolio and for the future of crypto.
So, if you're looking to understand the forces shaping your investments, or maybe you're just curious about how global monetary policy really impacts digital assets, you are absolutely in the right place.
Well,
Let's dig in. Okay, let's start with the main event. That big announcement on September 17th. What exactly did the Fed decide, and why was everyone watching so closely?
so on that date, the Federal Reserve cut its benchmark interest rate by 0.25%. That's 25 basis points, a quarter of a percentage point.
Okay.
And this move brought the target interest rate down into a range of 4.00% to 4.25%. Now, like you said, it was anticipated, but it still marked a significant shift in their policy stance.
Quarter-point cut. It might sound modest on its own, but what was really driving this, it feels like there was more than just the economic data involved here, wasn't there?
Yeah, if you look closer, the decision was definitely influenced by a couple of key things. Primarily, there were clear signs the U.S. labor market was weakening. We saw some downward adjustments in job figures, a little uptick in unemployment. But, to get the full picture, you also have to acknowledge the, significant political pressure.
Wow. Right.
Pressure from President Trump to ease monetary policy, that sort of dual influence on the decision. It's quite telling.
So this wasn't just a one-and-done cut then. The Fed's moves often signal a sort of broader strategy. What do their projections, the famous dot plot, tell us about where they're headed after this?
Yeah, that brings us to a really critical piece, the Fed's dot plot projections.
Right.
For anyone unfamiliar, that's basically an anonymous forecast from each Fed official about where they see interest rates going.
Okay.
And in this case, it indicates they expect to implement 2 more rate cuts in 2025, specifically thinking October and December meetings.
2 more this year.
Yeah. And beyond that, they're anticipating continued easing into 2026 and 2027. So it really outlines a pretty clear, sustained path towards a more accommodative monetary environment.
With such a clear signal of easing from the Fed, you might expect the crypto market just to ignite.
You would think.
But the immediate reaction seemed a bit muted, especially for Bitcoin. What happened there?
That's right. The immediate response was quite nuanced, almost a non-event for some assets. Bitcoin, for instance, it only saw a slight decrease, maybe 0.4%, hovering around $116,300. And this is largely down to that classic buy the rumor, sell the news idea.
Right.
A 25 basis point cut was so widely anticipated, it was effectively already priced in. The market had already adjusted beforehand.
Okay, so a gentle sigh from Bitcoin, not a roar. But what about other major cryptocurrencies? Did they just follow Bitcoin down, or did we see something different happen there?
Well, interestingly, Ethereum, ETH, actually showed a stronger recovery. It increased by about 1.3% to roughly $4,573.
Oh. Wow.
Which suggests, maybe some diversification of funds, capital flowing into other major cryptos beyond just Bitcoin, and even some of what we call the blue chip altcoins.
Right, the established ones.
Yeah. Exactly. Those well-established alts with big market caps, they saw positive performance too. BNB was up, 2.18%, SOL rose 2.81%, XRP gained 0.8%, XLM up 2.83%.
So some positive movement there.
Yeah, it indicates an improved, maybe cautious, but improved risk appetite in certain parts of the market.
Okay, so subtle for Bitcoin, but some altcoins actually caught a bit of a bid. This tells me we need to look beyond those initial headlines. What are the deeper forces really at play here? What actually shapes crypto's path after a Fed decision like this?
Yeah.
Beyond just the immediate noise.
Right. Zooming out, there are several key factors. First, let's talk about the nuance in that dot plot again.
Okay.
Because while the Fed forecast 2 more cuts in 2025, which sounds good, their projection of only 1 cut in 2026, that was seen as a bit, cautious by some investors.
I mean, disappointing, maybe.
Yeah, slightly disappointing, maybe. That slower pace for 2026 likely prevented an immediate, really aggressive rally in Bitcoin. It wasn't quite the floodgates opening some had hoped for.
And it sounds like there was also some uh, internal friction within the Fed itself tied
Yeah.
to those political currents we mentioned. How much does that kind of internal disagreement play into how the market sees things?
That's a very perceptive question. We did see that political pressure influencing things, specifically with the new governor, Stephen Miran,
Appointed by Mr. Trump.
appointed by Mr. Trump. Exactly, casting the sole dissenting vote. He actually wanted a bigger 0.5% cut.
Wow, okay.
And this internal division, the sign of less than total unity, it can create some, let's say, psychological instability in the market. Makes investors maybe a touch more hesitant.
Okay, so those factors might have put a damper on immediate enthusiasm, but often lower rates create longer-term macroeconomic tailwinds, right? How does this decision impact things like the U.S. dollar bond yields? And what does that mean for crypto down the road?
Absolutely. And the impact on the US dollar index, DXY, and bond yields is really a crucial long-term macro factor to watch.
Okay, the DXY, that's the dollar versus other currencies.
Exactly, measures the dollar's strength. And generally, lower interest rates lead to a weaker US dollar and a decrease in treasury bond yields.
Right.
Now, that dynamic tends to be quite favorable for risk assets like crypto. They just become relatively more attractive compared to assets offering fixed, now lower, returns.
That makes sense. Pushes people out on the risk curve.
Precisely. And this is where the patient investor often finds the real opportunity.
Now, when we talk about market resilience, especially for Bitcoin, who are the big players providing that, support wall for prices, preventing a big drop even when the news is mixed? It can't just be everyday traders.
Yeah, a fascinating insight here is the consistent positive trend we're seeing in Bitcoin ETF inflows.
Ah, the institutional money.
Exactly. Recent data, like for September 10th, showed strong net inflows, estimated around plus $741.5 million in one day.
Wow.
So that unequivocally tells us that institutional investors are actively accumulating. They're effectively creating a strong support wall for Bitcoin's price. This isn't just speculation, it's significant organized capital moving in.
And it's not just institutions through ETFs, is it? Are those large individual investors, the whales as they're called, are they also accumulating, getting on the long term?
Indeed. On-chain data confirms significant whale accumulation.
Okay.
We see these large crypto wallets continuing to buy into the market, particularly at lower price points. And at the same time, the amount of Bitcoin actually held on exchanges is going down.
Oh, interesting. Moving it to cold storage, maybe?
That's the implication. That specific combination, whales buying, exchange balances, decreasing signals, really robust long-term confidence among these major holders, they're suggesting a OCHO-DL strategy.
Right, holding on for dear life.
Pretty much. A long-term holding approach driven by strong conviction in future prices, resisting selling during dips.
Okay, so we've covered the immediate reaction, the sort of underlying currents. Looking ahead now, what does all this mean for the future? What are the possible scenarios for crypto in the coming months, maybe even years, given this new monetary path?
Right. This is where we shift to forward-looking strategy. Our analysis points to a base case, which seems to have a high probability right now.
Okay, the most likely outcome.
Yeah. With the Fed committing to this sustained path of rate cuts, the monetary environment just gets progressively easier, more accommodative.
Mm-hmm.
And that's widely expected to push stronger capital flows into crypto, especially in the later months of 2025. It should lay the groundwork for a new price rally. It's that fundamental shift in liquidity that historically boosts risk assets.
That sounds pretty positive, hinting at a potential rally coming. But, markets rarely go straight up. What about the downsides? Are there significant risks that could derail this otherwise optimistic outlook?
Absolutely. And we have to consider a risk scenario, though we see it as lower probability right now.
Okay.
The main worry is if U.S. inflation, which is currently around 2.9%, still, above the Fed's 2% target, if that were to unexpectedly surge again.
If it reverses course.
Exactly. If that happens, the Fed might be forced to halt this easing cycle early, or in a more extreme case, even reverse course and start raising rates again.
Ouch.
Yeah. That would fundamentally change the whole monetary picture and is, arguably, the single biggest risk to the current market outlook.
That's definitely a critical thing to watch. Now, does this changing environment affect all corners of the crypto world equally? Like, how do stable coins, which are tied to traditional currencies, fair compared to something super speculative like meme coins in this kind of landscape?
That's a great question about differentiation, because no, it doesn't hit everything the same way. For stablecoins, for example, lower interest rates might actually reduce the appeal of those that offer yield.
Right, because traditional savings might look slightly better relatively.
Or just less bad, perhaps. But their fundamental utility, for payments, for getting into DeFi, that's expected to stay strong. Their core function isn't really about yield generation for most users.
Yeah.
Meme coins, though, totally different story. Being highly volatile, highly speculative assets, they're likely to see much more pronounced price swings.
More whiplash.
Exactly. And they could be more susceptible to those sell the news events, especially if they lack strong underlying fundamentals.
Yeah.
They really tend to ride the overall market waves much more dramatically.
That's a really valuable distinction. Now, thinking about the past,
Hmm.
what can history tell us? How has crypto reacted to Fed easing cycles before? Are there patterns we can look at that might give us clues for 2025 and beyond?
Yeah, historically, if we look at comparisons with past cut cycles, the initial reaction in crypto during the early stages of monetary easing,
Right.
it often involves a slight adjustment or dip.
Okay.
It mirrors that buy the rumor, sell the truth thing we talked about.
Right.
However, this is typically followed by a strong rally later on as that new liquidity gets injected into the financial system.
So a delayed reaction, but positive overall.
Often, yes. For example, back in 2019, during what they called a mid-cycle adjustment, crypto saw a slight initial dip, but then a strong rally followed.
Mm-hmm.
During the 2020-2021 COVID crisis, obviously a unique situation, there was a sharp initial drop, but then that record-breaking surge happened. So
Right.
for 2025, the forecast kind of aligns with that pattern. Maybe an initial slight drop or some sideways movement, but with an overall positive trajectory expected in the longer term. History suggests patience is often rewarded here.
Okay, so given all this analysis, the Fed's likely path, the institutional money flowing in, these historical patterns,
Yeah.
what should listeners be thinking about strategically? How can you navigate this over, say, the short, medium, and long term?
Right. From a broader perspective, let's break it down. For the short term, like the next 1-3 months, the market might just see continued consolidation, kind of trading sideways in a range.
Okay, maybe wait and see.
Potentially. Investors might want to wait for clearer signals, maybe from the next inflation report or future Fed statements, before making really large bets.
Makes sense. And the midterm, say 3-12 months out.
Looking at the midterm, 3-12 months, the outlook remains pretty positive, driven mainly by that easing monetary cycle and the sustained institutional inflows we talked about.
Okay.
So any price dips during this period could potentially be seen as strategic opportunities to accumulate quality crypto assets, like Bitcoin and Ethereum.
So buy the dips in the midterm, potentially.
That's the thinking in the base case, yes. For an informed audience like yours, you might want to look at things like on-chain metrics, maybe Bitcoin exchange outflows, or DeFi total value locked TVL trends for Ethereum to help time potential entry points.
And for those with an even longer horizon, thinking years ahead, what's the picture look like then? And just as importantly, what are those key risks they absolutely need to keep monitoring?
For the long term, say 1 year plus, once interest rates continue to be cut and maybe reach a more neutral level, crypto could very well enter a really powerful growth cycle, potentially reminiscent of that 2020-2021 period.
The last big bull run.
Exactly. However,
Mm.
we always have to consider the key risks to monitor.
Always.
Number one is persistent inflation. If it just doesn't fall as expected, the Fed might have to hit pause, or even worse, reverse those cuts. That changes everything.
Right.
Number two, political volatility, particularly that continued pressure potentially from the White House on the Fed. That could introduce significant unpredictability into monetary policy.
Yeah, makes the Fed's job harder.
Definitely. And finally, you always have to keep an eye out for black swan events.
The unknowns.
The complete unknowns, unforeseen geopolitical crises, sudden shocks in traditional finance, those could negatively impact all risk assets, crypto included. Those are the wild cards that demand constant vigilance.
Okay, so to try and bring this all together, the Fed's 0.25% rate cut back on September 17th. While it prompted a fairly quiet immediate reaction, it really seems to set a decidedly positive tone for the crypto market in the mid to long term. Is that a fair summary?
I think that's a fair summary, yes. The underlying fundamentals seem strong, definitely bolstered by the anticipated easing of monetary policy and those consistent institutional capital flows. The key, really, for you, the informed learner, is to recognize these larger patterns and understand that those dips we discussed, They can indeed be strategic accumulation opportunities, assuming the risks stay contained.
Right. It's about looking beyond those instant headlines, isn't it? Understanding the deeper currents at play, maybe discerning that quiet hum of institutional accumulation happening beneath all the surface noise.
Indeed. And maybe here's a final thought to chew on. Considering the historical patterns we've discussed, if other central banks around the world start following the Fed's lead and begin easing their own monetary policies, how might that global ripple effect transform not just the crypto market, but maybe the entire landscape of global finance over the next, say, 5 years?
A very compelling thought to mull over as you navigate these dynamic markets. Thank you for joining us on this deep dive. Stay curious, stay informed, and we'll see you next time.